Okay, folks, we have a reaction video. These are very, very popular. We get a lot of requests for them. Some of them are 5 seconds long when I just go, this person's an idiot, I'm not even going to listen to this. And some of them have very good commentary that we can, actually react to and discuss. And those are the ones we obviously enjoy more. I think people enjoy the ones where I'm just like mother effing the screen and throwing things, but I've not seen this video. It's here on the screen. I've not looked at the screen yet. So this is completely, fully never seen before. Mo, you've seen it?
No.
Do you know what it is?
No, I don't know which one this one is.
Okay.
He showed me 5 and he was like, here you go.
Okay. Rick Ryder, Reader, BlackRock Fixed Income.
Oh, I don't know this at all.
Mohamed, what's your opinion?
So I think Rick is right in terms of we're going to get less credit extended to the economy. The question is how much less? Look, we are in phase 2 right now. It is different from phase 1. Phase 1 was a mishandled interest rate cycle, doing nothing and doing a lot very quickly, and poor supervision and regulation, exposing poor management. That was what those first 4 banks was about. Now we're in phase 2, where contagion, and in particular, people reacting to how the previous failures were handled, including First Republic, where you destroyed 97% of the value in the stock price during the process. People now have become very edgy. So now we have stage 2, where banks that are not particularly badly managed, they have issues, but they're not particularly badly managed, are suddenly vulnerable. And they're vulnerable to this path dependency.
So you said, what do you mean by that, Mo?
I mean, this is the good thing and bad thing about the kind of more digital world we live in, is any type of scare, any type of dip in a stock price can instantly cause not even a bank run, but
well, it wasn't even a dip in the stock price. We had banks, yeah, correct.
That's
banks just, but the government has said we're going to back all deposits, right?
Yeah.
But like you said, now he's talking about phase 2, which is you start looking, guys, look at the stock market in general. Mo, what's the all-time high for Apple? Like 180?
183, I think.
And it got last week to 171, and yet the NASDAQ is still 40%, 30% lower than its all-time high.
181.
And the reason being, as we've talked about this before, the most overvalued and most messed up companies start the surge, the drop. Then the next phase is the moderately overvalued or the little, and it goes in stages. I think that's what he's discussing here. Like, we had the most obvious ones. When I say obvious, I don't mean beforehand, don't get me wrong. But then afterwards, the people who didn't hedge their interest rate risk and didn't do these things, they fell first.
Yeah, pretty much the most poorly mismanaged.
Yes, the most poorly managed.
Managed, yeah. Mismanaged.
Because poorly mismanaged would be the
That's a double entendre.
Double entendre. Is that from The Office?
No.
Oh, okay, gotcha. So, by the way, Mohamed El-Erian, his voice drives me nuts, but he's a very smart man. He used to be at PIMCO back in the 2008 crisis.
Now he's like the dean of King's College,
That's
Cambridge.
Queen's College?
Queen's College, something like that.
King's College, you chauvinist.
Well, we have a king now, so God save the king.
Yes, that's true. All right, let's keep listening to this video.
This multiple equilibria. As you go down, and phase 3 would be widespread financial contagion. Hopefully we won't get there. But as you go down that's
probably what happened in 2008.
The risk of credit contraction goes up significantly.
So guys, in any bubble, this is what happens. Think about it. You have the super hype, super crazy, super insane stuff fall. Then the middle stuff falls. And before you know it, you get to a point where nothing is good. Right? When I was buying real estate from 2009 to 11, literally they considered all real estate toxic. I remember having a conversation with a bank saying, hey, I'm going to buy this piece of real estate in Ohio. Yeah, we don't lend to Ohio. Why not? We had a lot of foreclosures there. Well, what does that mean? Well, we just look at too much risk. Oh, okay. And then that makes Ohio real estate that is good fall in price.
Right.
You look at California, you look at Arizona, all those hype markets, those are the first ones to fall in value. You look right now at real estate. This is what happens in bubbles. This is exactly what happens when things are overhyped.
And it's slow. Contagion, I think a lot of people think that contagion means a couple of weeks.
Because when we feel the bubble burst, that's what happens.
Right.
It is very quickly.
But this can last 2 to 3 years. I mean, if you look back at 2008, there were many banks going down 2 years after the first one.
Yeah, and you look at 2008 stock market crash. It peaked in 2007. In October of 2007, the S&P peaked. In 2008, it started down like 13, 15%, and then had a crash, and you had a lot of volatility. These things afterwards, it feels like it happens very quickly. And by the way, 2008 was kind of quick. We had the crash in September, and by March, we hit a bottom. But in that time period, from October of 07 to March of 09, we went from a peak of 1,500 in the S&P to a bottom of 666. That's a big drop. That's a 60% drop overall. So I want everybody to understand these things is like, what he's speaking about here is completely spot on. Like, you're gonna at some point, if it does get to phase 3, which he's saying hopefully it doesn't, but if it does get to phase 3, you're going to see good banks have problems. Why? Because people are just going to be against every bank.
Everything banking, yeah.
Just like when it was EV. I was just telling a story today at Career Day. 5 years ago now, 95% of the businesses pitched to me were cannabis. Now nothing. And all the ones that were pitched to me, none of them are around today. Oh, but we have an inside. That's what happens. Like cannabis is now not the leader in, that was it. It's EVs, it's all these things. And guess what? In a few years, we'll be talking about something else completely.
Yeah.
Whatever it's going to be. I don't know what it's going to be, but it'll be something else. Now, does that mean EV is going away? Does that mean cannabis is going away?
No,
of course not.
Cannabis pitches were the best.
They were amazing. I remember once there was a pitch where a guy said, yeah, we have another investor. We gave him 40% of the business. He put $2 million in a bank account that he controls. And I go, I'll take that deal. I go, I'll do it for 30% of the business. I go, what money does he owe? He's like, nothing. I'm like, I'll do it. And then they didn't take it. I was like, that's a BS. Like they lied about that. Because I was like, I'll do it for 30%.
I remember I was at a barber shop and there was a guy that he was like, I guess there was only like 4 licenses that were going to happen in Ohio. There's like 1,600 people going for him. He's like, we are going to get one of the 4. I was like, why are you so confident?
Pitched. No,
I got already been told. I was like, oh.
No, I got pitched. Okay. Every single pitch I had in Ohio was we're the one. We have the inside track to get that one. Not a single one. By the way, all the ones I knew who got it were the ones who just did it privately. Like, why do we need to raise money? We got this thing.
Yeah.
It was incredible. Anyhow, the point about bringing up cannabis and EV is not to say anything other than the characters are different, the plot's the same. That's all it is. It's always the same story. It's never, ever different. And there are people out there who think crypto's different. It's not different. There are people out there who think EV's different. It's not different. There are people out there who think everything in the world is different. It is not different. At the end of the day, what matters? What matters is the price you pay for every investment you get, the present value of all future cash flows. Look at PayPal last night. They beat on earnings, they beat on revenue, and they're currently down 11%.
And they raised guidance.
Why? Because they're worried about margins.
Right.
They just said, hey, listen, we're worried about margins here, and the stock's down 11%. Okay, let's keep going.
Okay.
So it's very important to now do a much better containing this problem than we did in phase 1, which only contributed to phase 2 because of the way it was handled.
You talked about containment, Mohamed. What is the circuit breaker right now for the stress we're witnessing over the last 6 weeks?
One is for banks to continue to be more proactive. What's different this time around is when there's been uncertainty about banks, the institutions haven't allowed the adverse dynamics to build up momentum that have come out. The second thing we need is
Are you falling asleep?
Much better private-public discussions because it's in everybody's interest with first repayment.
Fast forward.
I'm trying to focus.
I don't know how.
Listen, I think we've watched enough of this. Mohamed's a brilliant man. He's very smart. Anybody who works at PIMCO and they're, Bill Gross is a brilliant man. I think he founded PIMCO. I just want everybody, when we teach on this channel, our message has been the same since day one. We do not, in fact, as prices go down, we get more excited about investments, right? Yeah. And guess what? There will be a time when we're buying stocks that are down 80% and people say, what you don't get is how bad this company is. And I'll be like, okay, like PayPal, margins are declining. Oh my God, it's like there'll be a time when the margin's very, very low. Even lower than it is today, probably. And the stock will be a lot lower than it is today, and hopefully I'll be buying.
Yeah.
That's the key here. That's what everybody's got to remember. I repeat this till I'm blue in the face. All the plot's the same every single time. The characters change. That's it. And right now the character is banks, and a year ago, nobody was looking at this.
No.
And that's what always happens. It's like these things muster up, and could we have another banking crisis? I don't know. Frankly, I don't care. All I know is that there'll be a spark in the room filled with gasoline that'll cause the explosion. What's it going to be? I have no idea. But it'll eventually happen. Thanks, guys. Subscribe to the channel. Share this with somebody who's always fearful about what's happening in the current markets and the news because it's not going to matter in the long run. Thank you very much for your time.